let's look at /CL. That's where we'll start, and we'll look at the side-by-side in here. For many of our new users, you get a good, clear understanding of what we're doing. These are cycle brackets on the bottom for those of you that look at these and say these are cycles. Well, they're actually not cycles. What they are is a tool that helps us see where the average lengths are and how the rhythms would set up were it to make exactly a low in the exact right spot where there is distance of an equal amount in each of these. You can see this low right over here, it's pretty close. This low over here is also pretty close. But then this low right over here made no sense at all. It came right in the middle of this cycle. And usually when it gets down close to the previous low, that would be a very bearish case. Once momentum established its way back to the upside in here, and with all the geopolitical issues that we're seeing right now, that has oil moving up significantly, and it's really not stopped. Now what happens in here is that the window of time for the downside correction has shortened significantly. There's daily patterns that show troughs in mid-February and in mid-March. And we actually have those both projected in here. Usually if it's a later one, it will come down a little bit lower. And you can see this time frame right in here is similar to the time frame that was right in here and similar right in here. So that only gives you a brief window for decline. This one was about a month. This one was about a month and a half, though the final move in here was only a few weeks. And that's what we would expect right in here, a pullback in here into what is a buy zone, and it's a buy zone because of what I just described to you, and then moving up again. The difference and I'll blow this out a little bit, you can see this area where there's this yellow period of risk, and we had that period of risk highlighted right over there. That comes when you have a nesting. In other words, more than one cycle coming down towards the end of the bigger dominant cycles. That was here where you had the big decline, and here where you had the not so big decline as it was extremely strong with only a little time left to go for both of these cycles. Here in this case, well, we have a little bit of time left to go, and that should bring a decline of something like a month or so, and then be moving up again. So here's the way this sets up right here. If I look at the dates right there, that's out into the lows that come out into mid-March. This low right over here on that shifted or overlapping dominant cycle comes down into the middle part of February. So that's what we're looking at, either a pullback here into mid-February or a pullback into mid-March. And then after that, the market moving up again in a significant way. And we have that projected up, as you can see, to over $92. So if it pulled back into the area of about under 84, 83, it's likely that the next rally that should last a couple of months would then have it moving up about $10 from that low, probably minimally, looking at that.